Third, OG believes that meme investing is like buying a pig in a pod. You rely on trends, memes, and buy everything that is popular. We think that it is very risky to do because in reality, investing is actually difficult to understand, takes a long time, and is really risky. These facts are gone when people do meme investing. Therefore, as the government side, we believe that it brings more harm than good, right? But before that, couple pieces of setup. Firstly, we said that meme investing is that, for example, stocks that are being promoted by an influencer, things that is popular on the internet, right? Secondly, we said that meme investing lead people to want to opt into stock investing, especially those who are new to investment and they don't understand the market yet, right? Thirdly, our alternative is that firstly, on the other side, we say that there is no need to invest in stock. People can opt into things like property, hedge fund, etc. that is way more safer and stable. Or secondly, even if they have to invest in stock, they would invest on stock that is not popular because of the meme investing, right? So I have 2 points to argue today, which is firstly, why meme investing is inherently risky, and secondly, why comparatively normal investment are better, right? First point, why meme investing is inherently very risky. We said it creates irrationally. We think that because of meme investing, it saturates the information from people and causes people to become irrational. The misinformation looks like, for example, firstly, the idea that it doesn't take a lot to start investment, right? In the current status quo, people are told that they can start investing from low capital. For example, in stocks, you can start from 5,000 rupiah, right? And how people frame is that how you can by saying that you can own a company from 5,000 rupiah, and it's making people to think that it's actually easy to get rich with low capital, especially when doing meme investing, they choose stocks that is lower in price so that it's easier to manipulate the price, right? In reality, we said that it is not true, right? Because when you invest small, it means that the return you get will also be small, right? To get a huge return, you will need huge capital, and when you invest in a huge amount of money, you also have a high risk of losing your money. We said that the only way to get a huge return is with a small amount of money is through investing for a long time, but these people don't know that, and they thought that they could get rich easier very quickly with small money because of this information, right? Secondly, the idea that quote unquote meme investing is easy to do. You only need to put your money in stocks that is being promoted, then your money will grow on its own, right? We say that the influencer in the status quo said that, oh, this is a meme, it is easy to do, it is going to be easy money for you, it is going to be very funny if they can make the stock price suddenly affected, right? We said that this narrative is not true, right? Because firstly, meme investing is something that is hard to understand. You need to know when to buy or sell the stocks, what affects the price. For example, scandals, posts that promotes the stock or make the stock price drop, which is actually hard to track and hard to understand, right? Secondly, even if people can understand it, we said that it's difficult to keep up the info for a long time, right? Because you want to invest for the long term in order to gain profit, right? So this becomes a burden for people to keep track of the meme stocks, for example, so that you can get profitable. And if you miss the timing, you can easily lose money on their side of the house, right? Thirdly, we said that even if they can actually keep up with 1 or 2 meme stocks, we said it won't be enough to be profitable, right? Because there's also a term in investment not to put all your eggs in one basket, right? Because if it fails, you're going to lose all your money. So you need to diversify your investment in several stocks, etc., right? Therefore, all of this makes one decision even harder to make. So no, it is not easy to do meme investing, right? Thirdly, you can get profit with meme investing, right? We said that glorification in the status quo is very unrealistic, right? For example, by doing meme investing, you can get profit, you can get car, etc., just because of this meme stock that is popular, right? We say that the false image of meme investing is something that will make people inherently rich. No losses, just wins, and you just need to follow the trend, right? In the first place, we said that investing is already a go big or go home thing. You can either win hard or fail hard, right? Therefore, it's very volatile and dangerous. Therefore, you have to learn about it, right? But because of the trends of meme investing in the status quo, people get irrational. They want to opt in as quick as possible so that they can earn faster, right? So this gives a false sense of safety net because like people can quit job, get into meme investing, which is not strategic, right? It is risky because there are cases where there's market crash, volatility, bubble bursting, variables that are out of control. If you fail, you're going to lose all your savings, right? B, it is based on trend, right? We say that meme investing is extra risky because it is only based on trend, not based on quality or usability of the stock, right? This means that firstly, it is based on externalities that you cannot control. Secondly, we said that the people who are the one who control the externality will be whoever made the trend, right? In the case of GameStop, for example, there is in Reddit there is this kind of Wall Street bet. So this is based on whatever is popular on people on Twitter, for example, also There is cases of ASICs, for example, based on Indonesian celebrities. They want to make cryptocurrency, and it ended up being a one-night fame investment, right? Because it is being so much promoted by many celebrities. Thirdly, we said that this means that everyone can get rug pulled, where the people who made the trend, for example, put off the investment and making 90% of the investor to lose money. And this is very likely because they have the power to make more money based on the trends that they make, so that they can suddenly make a trend, make people opt in, and after much people opting in, putting their money in, they opt out and scam this kind of people, right? So the conclusion is, firstly, we said that meme investing is inherently very risky because it is based on externalities that individuals have no control over. Secondly, the people determining the value of the stock in meme investing are significantly more likely to do tricks like a rug pull after a short rise in price, destroying the investment made by the majority of the people. So why this is important, right? Because this means that only a few people will ever get profit from this kind of investing. The overwhelming majority will be scammed and not being able to get good value, right? So second argument, right? Why not normal investment are better? A, it is more stable. We say that because we invest in things like property, obligation, hedge fund, etc., we can see that is based on commodities and basic needs that all people were going to use later, right? So there's certain demand for things that they actually trade in, and it will never be obsolete. Compared to meme investing, if the stock is no longer funny or the timing has already passed, they move on to another stock immediately, right? So at least we are alternative. We said that there's a higher degree of stability compared to volatility on trend with meme investing, right? B, it is more predictable, right? When you opt into investment that is not meme investing, it means that you actually at least try to learn about the company, what business they're into, when their stocks actually rise or fall. When you learn about a company, we said that you are more likely to check, for example, based on the profit of the company, their innovation, their productivity, etc. We said that it's much more information, stable information compared to on the opposition side, where they do meme investing. It means that they only rely on which is the most funny stocks, right? Meme invest is only based on fake value or what is trend, right? So the level of arbitrage compared to meme investing is much more lower on the other side. The delta is when people opt into investment, on the other side, they know what they're buying as opposed to buying stock just because of its popularity and trying to gain profit based on the trending stock, right? The conclusion is, on the other side, with normal investment, people can put their money into something that is more stable, credible, and something that they can actually understand. There is much more safer choice for people because they don't need to keep track of the trends. They just need to focus on which company has better prospect and worth the investment. Very proud to propose. Thank you.